You're on.
Good afternoon. Welcome to the meeting of the Finance Committee for April the 21st, 2020. I'll call the meeting to order and I'll look for an approval on the agenda. Are there changes or additions to the agenda? Ms. DeSoto?
Yes, thank you, Mayor Borman. Administration would like council to consider moving the in-camera discussion with the auditor, which is E1, item E1, to be heard right after item D1.
Okay, anything else?
No, that's it.
Great, thanks. So then I'll move that the agenda be approved with that amendment. Those in favor? Opposed? Motion's carried unanimously. We'll look to the minutes of the Thursday, the November the 7th meeting of the Finance Committee. If there are errors or omissions in the minutes? Seeing none, I'll move they be adopted as presented. Those in favor? Opposed? Motion's carried unanimously. We'll move on to item D1, the Town of Canmore Consolidated Financial Statements for the year ended December 31st, 2019. Ms. Richardson. And welcome to Mr. Scott as well.
Good afternoon, members of the Finance Committee. So the first three items on the agenda this afternoon pertain to wrapping up 2019, which I must confess feels like a very long time ago now. A huge amount of effort from the whole finance team has gone into the year-end and audit processes, especially given the extra challenges we've had these last few weeks. So the first item up is the approval of the financial statements, which have been audited by Avail LLP Chartered Professional Accountants, our external auditors. The audit was conducted in accordance with Canadian generally accepted auditing standards. And with that, I will pass it off to a familiar face, Mr. Scott, partner from Avail LLP, for his presentation.
Hi, everybody. Thanks for having me. I have a guest with me this evening. Michelle Lutz is going to be with us, and she'll be helping me present. Given our method of presentation, we're going to do something a little different. I normally show you the statements and go through them. However, I've done a summary package for you this year to make it a little bit easier to digest. So I'll have Michelle run through that first. She has been auditing your town for as long as I have been around. She knows your people and your financials inside out. I just get to take the credit for all of her wonderful work on a regular basis. So this is a good opportunity for her to actually have some FaceTime with you and get to meet you. So she'll be running through the summary agenda for you, or the summary of the financial statements. And then I'll take you through the KPIs, or the key performance indicators, afterwards. But I will let her start and get into your great financial information. So Michelle, it's over to you.
Awesome, thank you. Hi, everyone. I'm just gonna share my screen here. Hopefully you can all see the statement of operations in the graphs. Yes, okay, great.
Yes.
Awesome. So I'll begin with the statement of operations, which essentially provides a summary of how things went during the year in regards to the revenue brought in and the current year operating expenditures. I'll be focusing on the highlights, and we'll be starting with revenue, as you can see. You will see the red lines here represent 2018 figures, and the blue lines represent 2019 figures. So overall, revenues have increased by $18.3 million over prior year. So what makes up this increase is net municipal property taxes has increased by 1.4 million as budgeted for. User fees and sales of goods has increased by 6 million, resulting from increased utility and solid waste revenues, and an increase of 5 million in housing unit sales by Canmore Community Housing Corporation, which I'll refer to as CCHC for the remainder of the presentation. Development levies have increased by 560,000 over the prior year as a result of increased development. So current year projects include apartment buildings and condos. Gain on disposal of tangible capital assets increased by $1.2 million as a result of the sale of the old daycare lands, and that's associated with the housing units sold for CCHC. And then government transfers for capital have increased by $7 million, given an increase in tangible capital asset additions during the 2019 fiscal year. The majority of this relates to the MSI portion of the rec center life cycle maintenance project. Other than that, the remaining revenues were pretty comparable to prior year and within budget expectations. Next will be the operating expenditures, which have increased over prior year by approximately $6.4 million. So this increase is made up of administration expenses increasing by $600,000 as a result of budget positions increases, COLA increases, and increased interest on debt. Road, street, walks, and lighting have increased by $600,000, and that's a result of an increase in snow removal and salt, increase in repairs and maintenance, and then loss on disposal of assets, which is a non-cash expenditure. Public housing operations is the big line this year in the graph. So that is, there was an increase in that expense of $4.5 million over prior year, resulting from the increased sale of CCHC's housing units, which correlates to the revenue for the user fees and sales of goods that I just discussed on the previous page. Utility costs have decreased from prior year by approximately $1 million, and this is due to unforeseen utility issues in 2018 requiring additional rehab top-ups from EPCOR. So that was just a one-time expense that happened in 2018 and it wasn't expected to occur this year. So that's why there's that decrease of $1 million there. And then parks and recreation have increased by $700,000, mainly due to the write-downs of older assets that were replaced as part of the rec center life cycle maintenance project. With that said,
sorry to interrupt. Do you mind if we interrupt with questions, or do you want to give your presentation then have questions afterwards?
It doesn't matter. Yeah, you guys could ask questions right now if you have them.
If you just want to finish what you have to say about this particular slide, then I have a question for it.
Oh, sure. Yeah, I was just going to say that the remaining operating expenses were comparable to prior year and within budget.
Thank you. So my question is, I'm just looking for a bit better understanding around the public housing operations, how that's informed.
Okay. Yeah, so like just why there's like such a large
what exactly
increase?
it refers to, and I don't recall seeing that sort of, well, I don't think we've seen these kind of bar charts in previous presentations, but.
So the cost on the public housing side is going to be the actual cost of the properties. So there's going to be the input costs on the sale. So in the CCHC side, we'll see generally it's going to be the gain on sale of those properties. Here, this is going to be the input costs are going to be shown separately from the revenues. So we have an increase in the revenues up top and below the same sort of thing.
And the input costs are literally the cost of building the property?
Absolutely.
The 49 units. Okay, thank you.
Yeah, absolutely. Okay, so then for the statement of financial position, this gives us a snapshot of the town's assets and liabilities and where those balances ended up as of December 31st, 2019. So for financial assets, there was an increase of $2 million over prior year, and this is a combination of a decrease in future or a decrease in investment in future housing and long-term investments by 12 million, and then there was cash and temporary investments increased by 14 million, creating that offset of $2 million increase net for financial assets. Liabilities decreased by $1 million from prior year, and that's both debt and trade payables decreasing, while deferred revenue, which is your externally restricted unspent grants, increased. Net financial assets, as a result of the increase in financial assets and decrease in liabilities, have also increased. And then our non-financial assets pertain to prepaid expenses, inventory, and tangible capital assets. So there was $23 million in tangible capital asset additions in the current year. What makes up the majority of that 23 million is 10 million was spent on the rec center, 3.5 million on the life station construction, another 3.5 million on the wastewater treatment plant dewatering upgrades, and then there was 1 million on a fire truck. So then overall accumulated surplus, which is made up of our unrestricted surplus, reserves, and invested in capital assets, increased by 16 million as a result in capital and current year surplus of the consolidated amount of $16 million. So overall, the town is in a very healthy financial position as it continues to increase its financial and non-financial assets. Any questions on this statement?
No, but I like hearing you say that. That's my favorite part of this report every year is when Calvin, which he has done every year since he started auditing our books, he's noted that the town is in a very healthy financial position, and that's really good to hear.
Okay, awesome. So the next part, which is our last page of our the package here that I'm going over, is our audit findings. So for disclosures, we're just referring to the notes in the audited financial statements. So for the majority of the notes, there have been no significant changes. We did add a new note this year for subsequent events, which is just in regards to the global coronavirus pandemic. And we added this note across all of our municipal audits that we perform. So what the note states is that the pandemic has had a significant impact on the global financial market. And as the situation, as we all know, is changing rapidly, the future impact on the town is not readily determinable at this time. So that will be the new note that we just wanted to highlight this year that's included. With the independence auditors report in the financial statements, we did give a clean opinion again this year. So what that means is that we concluded that the audited financial statements present fairly in all material respects the financial position of the town as of December 31st, 2019. The auditor's report also discloses management's responsibility, which is they're ultimately responsible for the preparation and fair presentation of the financial statements in accordance with the accounting standards. Our responsibilities as auditors, so our job is to attain reasonable assurance whether the financial statements as a whole are free from material misstatement, and then to attain audit evidence that is sufficient to provide a basis for our opinion and arriving up at the clean audit opinion that we gave this year. And then there's a quick reference to the debt limit and the salary and benefit note as well in the auditor's report. And that's essentially what we have in the package for right now. I'm not too sure if you want me to go over the post audit and the management letter right now.
I'm okay if you don't. It's fairly standard.
Yeah.
I did want to make just an observation for future audit reports. I found this council exit package really, really concise and helpful.
Mm-hmm.
And this is something that's new this year, and I would hope to see that become a regular part of your audit. Thank you.
It's generally the notes I keep for myself. I finally decided to share them with you.
Now, it's nice to be able to see that quick snapshot.
And on an overall basis, we'll go through. I know Rick will present the bridge later on. It'll give a better reconciliation of what the actual surplus for the year was. Your consolidated statements show a surplus of $16 million. That includes a bunch of non-cash items, amortization, capital grants, and it doesn't show the expenditures that occur with it. The 23 million of capital expenditures that come off of that. So we want to make sure we go through that. And I know Rick always does a great job with the bridge report. So you'll get that better detailed information than And on a monthly basis, you're getting great financial information. So there's not a significant number of entries that we're making at year end. So the cash basis reports that you're seeing on a regular basis give you good information to make your decision making. And this is just the required format for our presentation. So that's why we go through it. What you get on a regular basis is far more understandable.
Great, thank you.
You bet.
Thanks.
The next thing I'll take you through quickly is just the comparative graphs of the indicators of financial condition. So we can see how you line up against other municipalities. Let's get Michelle to drop her screen share and then I'll throw mine up quickly.
So this is attachment number 2 in our agenda package. Right, thank you. This is another piece of work that I really appreciate as well, Calvin, and we've seen this now for a couple of years, I guess, at least.
Yes, it's a nice little tool just to know where you stand in comparison to the other municipalities. It was a question we got asked on a regular basis as far as where do we compare, and so we decided let's show you. So all of this information is pulled from the Alberta website based off of prior years. So until these financial statements are posted, we don't have anything but your own information for 19, but at least we can see that 5-year trend. The first thing I'll show you with, just to give a little background on the report, is the last schedule, which is the population graph. So you can see that the population that they have on their website, municipal affairs for Canmore, is going to be 13,992. There's going to be 3 comparative lines here. The town average is going to be all towns, regardless of their size in Alberta. So that population average for all towns, just to keep to note, is 4,449. So a lot below where you're at. So you consider that red line is all towns in Alberta is a little bit different from what your population is. The comparable town average. So we have the towns that we're comparing you against in the similar population range. The average population is going to be 14,600, so only about 600, 650 higher than yours. And the population average of any municipalities that's comparable, 25% of either side, is about 13,000. So that's where the ranges come from, at least for the population size of what we're comparing you to. The listing now, so when we look at towns that are comparable to your size, there's only 4 other towns in Alberta that are similar in size. So that gives you an idea of what the line will be, should be similar to yours. And then the other line here that we're talking about of comparable municipalities on a population base, you can see that it includes much more as far as cities, MDs, and counties. So it gives a wider range, which obviously produce different results, given those municipalities are different. However, I just want you to be aware of what we're comparing you to when we show these comparisons.
Yeah. I guess it's worth noting that in the comparables of any type, number of counties, as you note, and of course, counties have fairly different.
Their operations are very much different than yours.
Yeah, that was my thought. Yes, yeah. Very different.
And that's why we show both the comparison of towns of similar size and of just similar size populations to provide just a different comparable. And the overall of all towns, just to have some sort of comparable base for you.
Great.
The first one we'll jump into is assets to liabilities. So on an overall basis, we'll see an increase from prior year here. Now this is going to be all assets, including financial assets, which is tangible capital assets. So we can see a significant increase on the asset side. As Michelle mentioned, there was $23 million of tangible capital asset additions this year, and that's why we'll see this climb in comparison to the prior year. And you're pulling right in towards average on an asset to liability basis. The financial assets to liabilities. So in this case, we're going to see that your municipality is shooting right along where it's been, sitting at that average mark still, no significant changes from prior years. The current ratio is where you'll see a big kick up from prior year. So there's going to be an increase in the current assets and a decrease in the current liabilities. So in the prior year, there's some debt that came up. Most of this debt was going to be related to CCHC operations for building homes that were then resold. So that increased the liabilities last year. On the current asset side this year, there was some investments that have moved from short-term or from long-term to short-term, which will affect this. There's about $9.5 million worth of bonds that are going to be due within the next year. Those have moved from long-term investments to current assets, and that helped kick this up this year. So oftentimes when any investments are coming due, we're going to see significant changes in this graph, and that's exactly what happened this year.
So that sort of the information you're providing there is not directly influenced by council's decisions. It's more a matter of how finance department manages the investments.
Yes, and the timing of those investments over the years. That's why it's important to look more at the 5-year average than it is just at the current year.
Yeah, and I'm assuming that the uptick in 2019 is a positive trend.
Absolutely. You're pulling right in towards, I'd say the average on an overall basis for everyone is about 4, right around that middle line. And that's where you're sitting, is just under that at this point in time.
Thanks.
The operating expenses to taxable assessment. So this is always a good thing to see, having low operating costs in comparison to the taxable assessment. The town has a healthy taxable assessment, but the operating costs are well below that. So staying at 0.93, where the average for all towns is 1.3. So lower operating costs. You'll see the increase this year. As we spoke to earlier, the CCHC costs related to housings had the small uptick, but generally being low here is going to be where you want to be. So that's a good sign there, positive graph. The flexibility indicators. So public debt charges to revenue. This is going to show your debt servicing to the operating revenue. Now, this is going to come down this year, mainly because of the operating revenue increase. So we'll see not a significant change. The town's been at 6% this entire time for the debt servicing charges, and that's comparable to everybody else, right on average. But those operating revenues have come up this year because of the sales related to housing operations. The debt to revenue percentage, always good to see this moving downwards. 2 things that happened this year. So there was a repayment of debt. A lot of the CCHC debt upon building and selling has been repaid. The general repayment as well with the town. And we're going to see an increase in the revenues that help drive this down. On an overall basis, we would imagine that this would continue to decrease over time, and you're slightly above average on a comparison basis, which is exactly where you want to be. When we look at the net book value of tangible capital assets, so this will tell you how old your assets are. You're at 73%, which is right along the comparable average of all towns. Not a significant change whatsoever. We've gone down from 76 to 73. We'll expect to see it right along this level due to your infrastructure investment, which is the next graph. So continuing to purchase tangible capital assets over top of the annual amortization expense. So this graph can vary wildly from year to year, depending on what your annual infrastructure investment is, what grants come in, what new construction is approved on an annual basis. This year, with $23 million in additions, you can see that definitely an increase in this, and over what everybody else was, all your comparables from the prior year. So a significant investment into the town this year. The own source revenues to taxable assessment. So this is going to show what your own source, so non-government transfers, whether that be operating and or capital, all of that's excluded, and it's going to be own source. So once again, you're below here because of your healthy taxable assessment in comparison to the other communities which you're showing. And generally the uptick this year for the revenue side, again, is going to be the CCHC sales that are going to boost this up this year. On the government transfers to total revenues, this is going to include capital revenue, so government transfers for capital. And much like your capital investment, it took a big uptick. the majority of your capital is going to be funded through government transfers. And so anytime there's a large amount of capital additions during the year, we're going to see increases here. So you can see that it was lower last year versus the 11 million of government transfers that came in this year. So still within range of average at the end of this year. These are
So
the.
that, sorry to interrupt again. So knowing financial situation for the province of Alberta and how grant funds and all may change over the next period of time, is that something then that we would expect to see a reversing trend on?
I would fully expect to see less government transfers coming in across the board, yes. The comparative side in comparison to revenues will differ, as I think revenues are going to go down by the same rate, but we're going to see less investment that would lead over the next couple of years for sure.
Right, yeah. Okay.
The reserve total here, so other indicators, which is a nice little place. One thing to note is that all your reserves are cash covered. So your reserves are anything that council has put away internally restricted for future projects, whether that be capital or operating. You're sitting at 14% of your overall accumulated surplus has been put aside for specific purposes. So that's one of those strong measures of financial health right here, and saying that you have put a lot of money for future projects and earmarked it to be able to support yourself. So a very good thing to have, especially in these times with uncertainty, to be able to have money set aside for the future. Very much a good indication of health, as is this final graph, which is the accumulated surplus available for future use. So this is both your restricted amount, so your reserves, and your unrestricted surplus at this point in time, and showing that you have had good health and the financial ability to maintain into the future. A solid year, a surplus again this year, and you actually have the ability to continue to operate into the future. So there are municipalities out there who are not in this situation. I'm hearing Vancouver may not be here, but you have the ability to maintain your operations into the foreseeable future, even given unforeseen circumstances that are occurring.
Yeah, I tell you, I've picked up on some of that from some of the teleconferences with the provincial government that municipal leaders have been involved in. Here's some questions from some other communities directed at Minister of Finance and others that suggest they're more concerned about their future capacity. So tough times for a lot of communities.
Absolutely. And at the end of the day, your graphs are showing that you have good financial management in place and healthy financial position to be able to continue. So it's good to see that that's happening. Any other questions for Michelle or myself on any of the financial information that you have?
We'll be going through the statements and all consolidated financial statements as well, or?
No, like that summarizes all of the
Okay.
consolidated financials for sure.
If I do have a couple of questions directly from the consolidated statement of financial position. If you want me to proceed with those, or other councillors might have. Yep. So I guess the first question, and you might have addressed this already, but in the financial assets, so on page 4 of your report, quite a big increase from 25 million in 2018 to 40 million in 2019. So what's the simple?
The simple one on that is going to be the transfer. So when I was talking about the short-term versus long-term investments, that's the bonds that are coming due that get moved from long-term up to current, and they get shown as cash equivalents, temporary investments.
Okay, so that's just reflective of that specific change.
Yeah.
Okay, thank you. If any councillors have questions regarding the consolidated financial statements, I'll try to keep an eye on the screen. If you put your hand up, I'll give you the mic. Councillor Comfort.
So I don't really know how to ask this. Would you have any recommendations, given the current crisis and the unpredictability of its end, with what we should do with, say, we should hold our position as far as reserves go and so forth? Should we proceed with our plans? Do you have any recommendations as our?
That's all going to depend on what those future plans are at this point in time. So if your plans were to expand heavily, I would say to hold off on that at this point in time. Maybe continue with the much required if there's any mediation that needs to be done, repairs and maintenance. I would say capital will probably be on the slowdown, but definitely dependent on what those plans are. If it's big on expansion or if it's kind of hold on for the time being. But I'd say definitely holding on to those reserves at this point in time and being as tight as possible would be the right thing to do for sure.
Okay, thanks.
Just specific to some of the notes in the financial statements, the note 9 around debt limits. It notes that debt limits are including the town's revenue and debt only. So the CCHC debt's not consolidated into this part of the statement. Correct?
That is absolutely correct. So under public sector accounting standards for this note, you have the option to either include CCHC or any of those combined entities or consolidated entities, or to exclude them. And
Right.
at the time, you've chosen to exclude them at this point.
Which I know is the case every year, so it hasn't changed year over year.
Which is, I believe, a good thing because it gives you a better perspective of your actual debt limits and not including whatever those other revenues might be.
Right. I'm just curious because throughout the other parts of your report, you include the financial data that CCHC impacts.
Yes.
So on the one hand, we're not consolidating in our debt records, but in some of the operational aspects, the financial aspects are included.
This would be the one and only aspect in which they are not included in your financial statements.
And I'm still looking at the little pictures there. If anybody has a question, just jump in. Councillor McCallum.
Thank you, Mayor Barman. Thank you, Mr. Scott. I'm looking at page, it's under reserves. It's page 16. And at the bottom of the reserves list, under capital, it says work in progress debt, work in progress taxes. I don't believe I've seen that before, although I could be mistaken. What does that mean? In terms of all the other reserves that we have listed there.
Well, I'll let Chelsea actually address that one if that works for you.
Yep.
So I believe, and again, a reminder of how different these consolidated statements look from the internal ones that we're used to looking at. So I don't think this is something new. I think it's, again, just a presentation piece between some of the terminology we use internally. And I see Mr. Irwin's popped in here, so he can help as well. But Rick, jump in here if I get this wrong. But I believe this relates to capital items that are incomplete during the year that we're carrying forward. So that funding is committed. Now, whether it's debt or tax funded, but that relates to specifically work that we've committed and amounts that have been committed for capital projects that have been carried forward for completion in future years.
Rick?
That's exactly true. The work in progress debt one, for example.
Can you turn up your mic or something, please?
Oh, I'm sorry about that. Sorry. Yes, that's exactly the debt. For example, we took debt on the wastewater treatment plant project from last year. Part of that is being carried over into 2020. So we have that held in reserve to fund the 2020 project. Same with the operating.
Thanks a lot, Mr. Irwin. Thank you,
You're
Ms. Richardson.
Just by way of an observation on note number 16, salary and benefits disclosure. Councillor Sanford notified me earlier that, of course, the per diems that are paid by the Bow Valley Waste Management Commission are not incorporated into the town's records. I don't know if Councillor Sanford, did you want to speak to that? Councillor Sanford?
Yeah. Thank you, Mayor Borman. There are a few committees, or have been in the past, where per diems are paid by the commissions or committees. And this is one of them. So that is outside of what is paid by the Canmore taxpayer. It's a per diem that's paid from the commission. And my total earnings from that last year were $6,000. So in addition to what I'm showing as income from the town, there was also an additional $6,000 of commission-based per diems. And all of the directors of the commission are paid a per diem. Although Banff has chosen to decline the per diem. So Banff doesn't collect the per diem, but all the per diems are paid to the directors. So that was just something that comes up occasionally since I've been on the commission for a few years. I just want to make sure that that's reported in addition to that earnings, but it doesn't come from Canmore. It comes from the Bow Valley Waste Management Commission.
Correct. So these consolidated statements would include Canmore Community Housing, the Canmore Library, and the Canmore BIA. So those are the three controlled entities which the town could either does have control of the board or could impose control of the board. Bow Valley Regional Transit is a joint committee, which is not included in these consolidated statements, and there is no control exerted by the town of Canmore, thus they're not consolidated into these statements.
I think you mean the Bow Valley Waste Management Commission.
Sorry, Bow Valley Waste Management, yes.
Okay, does that clarify it?
Yeah, you bet. Thank you. And to a smaller extent, I assume the same would apply to Councillor Comfort, who also sits on the Waste Management Authority. So thanks for bringing that to our attention. Are there any other questions from councillors for this part of the discussion? Seeing none. Did we want to have the motion on the table before we go in camera or after?
Mayor Borman, it's completely up to council, whatever your preference.
I think let's go in camera for the discussion with Mr. Scott and then come back out of in camera to consider the motion.
Okay.
In which case I'll move that the council go in camera. Those in favor? Opposed? Okay, we'll be considering ourselves in camera.
I believe you will have to click on the link on your screen,
Everybody has to join the breakout room.
except for administration.
So are we all back? Everybody can hear me? Okay, I think we have everybody's back. So we're in the public session again. Great. Thanks very much for the information you shared in camera. I don't know if CAO and Chelsea want to come back for the motion, but we're moving on to the motion. There you are. And Chelsea, doesn't matter, I suppose. So this time I will move that the Finance Committee accept the Town of Canmore's consolidated financial statements for the year ended December 31st, 2019 as presented. And I will speak in support of the motion. Each year I am so impressed by the work that Mr. Scott's team does for the Town of Canmore. I know that they produce equally consistent, strong reporting for all of the other municipalities that they audit. And I know there's a lot of municipalities that they do audit. Each year, of course, it's reassuring to hear from the auditors that the town continues to be in a healthy financial situation, and also continues to hear from the auditors that that our finance team is second to none. So kudos to Ms. Richardson and her team for the very fine work that you continue to do for the town and on behalf of all of our friends and neighbors and other residents in the town. So the motion's on the table. Anybody else care to speak to the motion? Councillor McCallum.
Thank you, Mayor Borman. I think this might be my 9th audit. And again, I'm impressed by the team that we have running our finance department. We clearly heard from the auditor that in camera as well as in public that we do have an excellent team and that they found no issues. We also can see from the KPIs how well we are doing with municipal comparators as well as towns of similar size, et cetera. I can't remember what the actual same size and comparables. That's right. So I'll be happy to support the approval of the audit. And I am grateful for the decisions this council has made over the past 9 years to put us in a position right now financially that we don't see ourselves like they do in Vancouver, where they might be facing bankruptcy. We have a strong financial team that has led us through various leaders over the last few years to get us to this point. And so I'm grateful for that. And I am happy to support this motion.
Just to be clear, the motion is to accept the Town of Canmore's consolidated financial statements, not to approve the audit.
I'm sorry. Yes,
The
thank you.
audit's certainly part of that. Is there other discussion on the motion? Councillor Comfort.
I also would like to express my appreciation to the finance team. I know how hard they work to give Mr. Scott everything that his team needs to do their work. And going forward, we're heading into, I don't know, perhaps the most uncertain time, certainly in my tenure. And that includes, you know, school board as well and other groups where we had finances, and there was a lot of things you could predict. So much is unpredictable now, and we're going to have to make some tough decisions, and we're going to need really, really professional help. And I think that our finance team is prepared and capable of delivering that, and it's very important. So thank you very much, everyone.
Further discussion on the motion? Seeing none, then I'll call the question, and this is on the motion to accept the Town of Canmore's consolidated financial statements for the year ended December 31st, 2019 as presented. Those in favor? Opposed? Motion's carried unanimously. Thank you again, Mr. Scott and Ms. Lutz. Thank you for joining us, and you can go back to your lives down wherever you are now.
Wonderful. Thank you again for having us. We really appreciate the opportunity to work with you.
Always a pleasure.
Enjoy the rest of your meeting.
Yes, indeed.
Good luck with your difficult conversations for sure.
Oh, yes. Okay, so we will move on to item D2, which is the 2019 Administrative Financial Report. Ms. Richardson.
So the next item, as you had indicated, is that 2019 Administrative Financial Report. So I'll cover the 2019 operating results, touch briefly on capital, and then conclude with our recommendation regarding the surplus. So I am just going to share a different presentation with you. So that was the item we just had. So I'm actually giving Mr. Irwin a break this year and will be tackling the bridge myself, although he is here to support me. So Mr. Irwin, jump in at any time. So as you've heard in previous years, the audited statements are prepared in accordance with Canadian public sector accounting principles and are different in presentation than our internal statements. Same set of information, same values, just quite different in how they're presented, and that really is determined based on what we're trying to achieve with each of them in terms of the presentation. And so our internal statements are really set up in a way to help us identify and determine what our municipal taxes needs are and what our surplus is. So I'm sure you'll all be familiar with how this bridge document works. So basically it's kind of that connector between the statements that Mr. Scott and Ms. Lutz just walked us through and the format that you're more used to seeing how we generally do our internal financial reporting. So the starting point for the bridge is our operating surplus per our internal statements. So that is consistent with the summary of all the business units that you have in attachment 2. And then we'll be starting from that and then working towards the final number that's consistent with the statements we were just looking at. So starting with our operating surplus per our internal statements of $1.7 million, we add a number of items and subtract a number of items. So we add back any transfers to reserves. For internal purposes, we almost view those as an expense. That's money we're putting into our reserves. We also add back capital revenues. Those aren't considered operating items. Those are handled through capital. So those are handled separately. And again, debenture principal is added back as well because that is a cash expense to us. We then deduct transfers from reserves. Again, for internal purposes, we view that more almost as a revenue. That's money we're bringing in from the reserves. Then we subtract the non-TCA expenditures. It's really just a reclass. So we often talk about capital items that don't actually qualify for TCA. So things like plans or studies, we consider those projects and we treat them as capital, but they're non-TCA expenditures. Then we deduct amortization expense, which again isn't included in our internal statements. And then we also deduct any loss or gain on the disposal of tangible capital assets. And that takes us to our non-consolidated surplus of 2.9, almost $3 million there. But again, our statements are consolidated, so that does include any surpluses from our affiliates. So we also need to take into account that 2.5 million that relates to our affiliates to get us to the total per our consolidated audit statements of 5.5 million. So that's how we kind of connect those two documents. I know that's kind of a lot to take in.
Always as clear as mud. Thank you very much.
And so it's really just how we connect, how we report externally per those public accounting standards to, again, what's more useful for decision making and how we typically look at things for presentation internally. So when we talk about our surplus, we generally almost exclusively aren't talking about that 5.5 million we see on our consolidated financial statements. Really, we're talking about that 1.7 million that is our internal surplus. And so consistent with prior years, this year we're at 3.3% of our annual expenditures of 53.1 million. So as a municipality, as we often talk about, we're not allowed to budget for a deficit. So we do often end up in a surplus position. We historically, I think, have sat between that kind of 2 to 3% of annual expenditure. So we're right within that range. At the very highest level, and again, consistent with how we've talked about it in prior years, there are three main things that are contributing to that surplus. Overall planning was better than their projected net deficit by 591,000. Policing was overall better again than their budgeted net deficit by $150,000. And then there's a lot of other items that contribute the remaining $990,000. And again, since I'm throwing a lot of numbers at you today, the variances I'm talking about now are variances between our 2019 actuals and our 2019 budget, as opposed to the presentation that Mr. Scott and Ms. Lutz had been doing, which is primarily comparing 2019 and 2018. So just when we're talking about variances, we're talking about a lot of the same items, but different data sets, if that helps. So on the revenue side, our revenues were better than projected in our budget by $1 million and $6,000, however you say that easily. So $609,000 is increased revenue from planning fees. So primarily that's building and development permits. 2019 was a strong year in our community. And those are generally hard to budget for. We do our best. But those often come in big chunks. I believe the lion's share of those came from 4 major developments last year. And so again, we do our best to budget as we can, but a certain amount of that is outside of our control, depending on when development comes forward. Police fine revenue up $102,000. Again, this comes through from the RCMP. We budget as best we can, but there are often variances from our budgeted to our actual results. We also had $81,000 more in franchise fees than we'd budgeted. And on the reverse side, we did have decreased recreation revenue, mainly from arena rentals of $96,000. And then all the other changes in revenue, not as material, were $310,000, which is how we get to that 1 million in increased revenue. On the expense side, we were better than budgeted by $725,000, so further savings. We had $295,000 in savings on net salaries, wages, and benefits above the budgeted slippage that we talk about each year. We also had savings in contracted services and professional fees of $252,000, and then a whole bunch of other less material items across a variety of expense lines across different departments, totaling $178,000. So in the package, there are more detailed breakdowns by area. If there are any specific questions on any of those areas, we can either address those now or at the end of the administration report, depending on council's preference, or finance committee, I should say.
I'm just flipping through my package. Are there any questions right off the top from Councillor Sanford?
Thank you for your presentation, Ms. Richardson. I did actually go through the WIP reports, the work in progress, and the capital closeout sheets. And I think what's really important that jumped out at me while I was doing that is that when we budget for things, our administration goes out and gets the required work done within that budget generally. And you know, if we're showing a surplus, it's because a lot of the times our administration is getting those services at very good prices. And in a lot of the capital closeout sheets, I'm seeing a lot of surpluses in those capital items. And so, you know, when we're showing a significant surplus as we are this year, I think a lot of that is due to the hard work that people are doing to get those jobs done within their budget so that they don't have to come back to council to ask for more money for those projects, but to get them done efficiently and to bring them in under a budget. Is that a fair assessment of that?
Correct. So up till this point, I've mainly been talking about about operating results. So as you just alluded to, and maybe I can just touch on it briefly and then we can talk on questions about both. So attachment 3 to this agenda item also includes all the projects that were budgeted for 2019, including anything we brought forward that had been whipped. So the work in progress, things we carry forward. So I should be careful with acronyms. So that includes the actuals that we've had, the budgeted amount, how it's funded, and then the status of the project, transfers in and out of reserves, and then also our deferred revenue transfers in and out. So I guess the one distinction I might make is that our surplus generally comes from our operating results, which is both connected and not connected to the capital side. But I think it's safe to say that whether we're talking about things that are handled on the capital side or the service levels we're providing through our operating expenses, that we do run pretty lean, and a lot of work goes in, I think, across the organization to try to ensure that we're operating within our approved capital project budgets and also approved budget on the operations side. And so overall, the combinations of the savings that we're able to achieve and then leanness we try to run with as an organization, combined with some factors outside of our control, such as how much planning revenue comes in, how much comes in police fine revenue, does usually leave us with that surplus position, if that kind of addresses where you were going with that.
Yeah, I mean, there's a lot of things that we do that we have to do to our best ability. And if we save money doing them, that's a good thing in a lot of ways. So thank you very
Makes
much.
finance very happy.
Yeah. And
We will be, the next agenda item is actually on capital projects. So we'll be able to get into a bit of detail on the capital projects and those that are whipped and whatnot in the under the next item.
So I appreciate your explanation. Thank you.
Any other discussion or questions in regards to the attachments for item D2, the administrative financial report? Councillor Comfort.
Yeah, I just do what Councillor Sanford spoke to there. I've been impressed in the past. We have a plan. We're going to do this particular capital project. We get bids, we make plans, we're going to go ahead. And then something occurs where the engineering department will realize, you know, maybe that's not the best thing for us to do. Perhaps we should do something else. And they look at alternatives. And quite often they come up with ingenious solutions, or they figure out, no, we need to do this first so we can delay that. And those expenses won't come up till later. And then be smart about how they do the RFP and all of that. So I think we're very lucky in the professionals that we have that handle those matters for us. And I think their work mostly happens in the background, so they don't get a lot of credit. So I'd like to put that on the record that I appreciate what they do. It's a tough job, and they're good at what they do.
Thank you for that. In regards to the summary of operations, that's part of this agenda item. Are there any questions or observations specific to those the operating budget roll-ups? I mean, I appreciate the detail that is included in the roll-up. So on the variances above certain percentage, there's always good explanation. When I was going through the roll-ups, looking at the numbers, questions jump to mind when you see a variance of 823% or 3,000%. Those leap out at you, but the details are very clear in the notes below each departmental budget. So I don't have any questions for you, Ms. Richardson, on the roll-ups. Are there any questions from councillors on that part of the report? Did you want to talk then about lead us into the recommended motion?
Absolutely. So historically, the surplus is often allocated to a number of different reserves based on established policies our financial strategy, future business plans and strategies. We often have detailed presentations breaking that surplus down between multiple reserves based on where the variances arose that led to that. However, we're in a very different reality right now, and in order to be responsive to the current 2019 pandemic and its unprecedented impacts on this community, as we'll be discussing later this afternoon, we're instead recommending this year that that entire 2019 operating surplus be allocated to the tax stabilization reserve in order to be available to address the financial impacts of this current situation. So as a reminder, under our reserves policy, the tax stabilization reserve's stated purpose is to mitigate tax rate increases in case of cases of an emergent non-recurring nature. So from administration's perspective, the current pandemic really matches the intent of that reserve and gives us a lot of flexibility in how we ultimately choose to use that surplus to best address the situation, but are recommending that the surplus in its entirety goes into that reserve, and that's the accompanying motion.
Thank you. And I was just flipping through my notes to see the balance of that reserve at the end of previous year was 2.3 or something. So if this 1.7 were added to the tax stabilization reserve, I thought it was in your report, but that would put.
Yes, it is 2.3.
Right, so that would leave us with about 4 million in that tax stabilization reserve.
Correct.
Right. And just in regards to what reserve it's directed to, I mean, I appreciate the recommendation that the entire surplus go into reserves for to be able to apply towards any COVID-related initiatives that we should approve when all of this business comes back to council. I just want to be certain that by the terms of the tax stabilization reserve, the funds will be fully accessible to apply in the short term and maybe very short term for COVID-related initiatives. So with that, that's a question. In the tax stabilization reserve, I'm fairly certain that those funds are easily accessible, but you could just confirm that for me.
Correct. So we would be, any transfers to and from reserves are at Council and Finance Committee's discretion. So we would be coming back to get further direction on that. But as I'd indicated, the purpose of that reserve is really to handle things of this emergent non-recurring nature, which I guess from administration's perspective, the pandemic seemed to really reflect that intent, perhaps more so than some of the other departments that have different purposes that are less targeted to events of this nature, I guess.
Yeah, let's hope it's one-time event. Another question in mind, but it just popped out of my mind. Are there any discussion around this part of the conversation from other members of council? Councilor McCallum?
I don't necessarily have any discussion. I guess wanted to reinforce that I feel that this is a prudent place to put this money. It's liquid, which makes it easier for us to access it for our initiatives any initiatives that are COVID related moving forward. And it assures the public that it's in a holding spot so that we can make some thoughtful decisions moving forward and that we can use those funds to do so. That's all.
Thank you. And that gave me a moment to remember where my head was going. So if this motion is approved, then that money is in the tax stabilization reserve. And if administration should come up with something in the very short term before the next council meeting, for instance, it would still require a motion of council to move it out of the reserve or to spend the money from the reserve for whatever that initiative might be. Correct? Right.
Correct.
So it's fairly easy to access, but it does require a council motion.
Absolutely.
Okay, thank you. Councillor Sanford.
Thank you, Mayor Barman. I think the flexibility that we get from putting it in this location will be, it's very good timing for us to put it here. And it gives us that opportunity to examine how we can potentially access it to benefit the 2020 tax year if we need to. So I think that gives our administration an opportunity to look at that with what's already in the tax stabilization reserve. Adding this will give them a few more tools to be looking at what we can do in 2020. So the flexibility is there, and I think this is a good way to use this reserve for this particular year.
So that was sort of by way of speaking to the coming motion. Is there any other discussion or questions at this time from Ms. Richardson? Just before we get to the motion, I did want to take a moment to echo what's been said through the discussion around the, on the face of it, what seems to be a very large surplus, 1.7 million. And I know the public, I am often asked the question, you know, why is it that the town has such big surpluses? Clearly, we're not budgeting well. But when you keep it in the context of something like a 3% surplus on the operating budget, I think 3% is a really very reasonable number to see there. We certainly don't want to be seeing deficits. So I'm always quite comfortable in supporting this aspect of our financial management. And thank you for your report, Ms. Richardson.
Thanks.
At this time, I'll move that the Finance Committee approve allocating the entire 2019 operating surplus of $1,731,182 to the Tax Stabilization Reserve. And I will speak in support of the motion. We certainly had conversation leading up to this about the opportunity provided by the surplus to address the initiatives that we know we're going to have to be taking in the near future. The Tax Stabilization Reserve seems to me, for the reason we've talked about, the best reserve to put the funds into. And I recollect over the years past the number of times that Council has talked about accessing the Tax Stabilization Reserve when we're doing the annual budgeting. And we've always been very, very careful about taking money out of that reserve to ensure that it's the funds in the reserve are used as intended, which is, as was noted, to address a specific need that won't be of a recurring nature. And as I said earlier, I certainly hope that this COVID situation doesn't become something that's recurring. So I fully support the motion. I'll look forward to discussions afterwards about what options there might be that may use some of these funds, but supporting the motion. Other discussion from members of council or members of the Finance Committee? Councillor Seeley.
I'll support the motion moving the operating surplus to the Tax Stabilization Fund. I think a lot of what we've heard is it gives administration some flexibility, and that's what the Tax Stabilization Fund is for. So we're fortunate to have it. I will support that.
Other discussion on the motion? Seeing none. Call the question. Those in favor? Opposed? Motion's carried unanimously. How are we doing time-wise? Where did we start? We're doing well. I'll move on then to item D3, the capital project summary. Ms. Richardson.
So the last item is the capital project summary, and I know we've touched a little bit on this so far. I'm sorry, kicked me back to the beginning when I stopped my video, so just bear with me. So I'm not going to get into too much detail here, but included in that agenda item, so in the report, there's a summary of capital projects that were completed in 2019. Also identifies which projects we're carrying forward to the current year, 2020, including the relevant funding. And then as consistent with other years, we do provide that project by project detail of the closeout sheets. So that was about all I had on that one, but happy to address any specific questions that anyone might have on any individual projects or anything else pertaining to the capital from 2019.
Thanks very much. All right, I just have a few questions just for to help me understand where we are on some of the WIP projects. So for instance, 7067, the sprinkler protection unit, which the fire chief spoke about earlier in a previous meeting as being complete. So it shows yet as a WIP project. Am I just to assume that there's some remaining payments outstanding from 2019, or so that would be made? Go ahead.
I can speak to that maybe, unless, well, or Rick, I mean, the WIP projects were as of December 31st, 2019, right? So we're now into the end of April. So yes, that project is complete by the end of April, but it wasn't complete as December 31st, 2019.
Thank you. And I assume that that was what I'm looking at. And is the same true of 7075, the land use bylaw update? Is that complete now, or?
That I would need to get complete answer from Lauren on that. I believe it to be complete there, but there may be some.
Some of that was carried over, sorry to interrupt, some of that was carried over to 2020, and that had to do with training and the implementation and rollout of the new bylaw, because it did have an effective date of just this past April 1st.
Right.
Okay, thank you. I'm looking for councillors or members of the committee to put hands up if there's any questions. Councillor McCallum.
I don't have any questions, but I'm impressed by the sheer number of projects we accomplished.
Yeah, there's certainly been
It's
a lot
lot,
of
hey?
completed, yeah. A lot of completed projects. The I guess the last one I have a question about is the life cycle maintenance construction program, which as of the end of 2019 was still in progress, and it still is in progress. I'm assuming that the COVID situation has impacted the final bits and pieces of the life cycle project. No.
Not my understanding, no.
But we're getting really close to having that complete, aren't we?
Absolutely. I believe I reported to council following a question a week or two ago that Bird Construction has demobilized from the site. And yeah, so then there's usually a warranty period, and we will likely keep that project open throughout the warranty period on a number of equipment related issues. But,
great. Yeah, I'd seen an email earlier today from Mr. Hannes indicating that there was one tradesperson on site doing some minor piece, but
yeah.
okay.
Should be an ongoing issue with the ice plant that they're still working through.
Right.
And they're using the opportunity with the arenas being closed to do some of that final work on that ice plant.
Great, thank you. Councillor Comfort.
That actually reminded me of a question that I had, which is, after we've done work and things are remediated or replaced or whatever, when does the warranty start? Is it when we finish the work, when the work is finished, or when we start using it? Because we may not use a lot of stuff for a while, and then when we actually start using it, there's a problem, but the warranty's expired because of time. Is that a possibility or a risk, a hazard that we run?
So I think that's an excellent question, and I can check in with Mr. Hanish and get back to council with an answer on that.
Great, I'm sure Stephen will be on top of it. So that just occurred to me.
So am I, yeah.
It's the kind of thing that would happen to me as a homeowner. I would, have something and they would repair the dishwasher and then use it again, doesn't work. I go back to them, they go, oh, but we did the repair on that already and you're out of warranty now. And it's like, so, but when it happens at the town level, the scale is not that much bigger. So we can check that somehow, Ms. Smithers. That would, sorry. I think I need a glass of water.
I have trouble with my name some days too. That for you.
Trouble with my.
Okay. Are there any other questions? Discussion on the report? Seeing none, thanks again for your presentation, Ms. Richardson. At this time, I'll move that the Finance Committee accept the 2019 capital project summaries as presented. Discussion on the motion. I'll support the motion. It's really helpful to have a full understanding of where we are on an annual basis, although we have to recognize that this is as of December 31st, 2019, but it's still a good snapshot at this time of year of where we stand on a number of capital projects that may have been approved some time ago, years ago. And to Councillor McCallum's point, it's good to be able to look through this report and see a lot of completes in the status column. So happy to support this summary as presented. Councillor Sanford.
Thank you, Member Borman. I too am happy to support the motion. And one of the things that Councillor McCallum just brought up was the sheer magnitude of how many projects we did in 2019. And I'm thinking that, that our 2-year budgeting cycle may be advantageous for that opportunity because we can plan things well within the 2-year time frame and then execute them more efficiently that way. So just the thought that we have so many capital items that have been completed is really impressive. So thank you to all the people that worked hard on that, and I will be happy to support it.
Other discussion on the motion? Seeing none, I'll call the question. Those in favor? Opposed? Motion's carried unanimously. So we have one last item, which is likely to be a long discussion. We're a little bit ahead of the timetable in the agenda. I know we won't get this discussion. I don't think we'll get this discussion finished in half an hour. Typically, if we're going to take, typically meetings out more than 2 hours, there's a break. Is there a preference from the Finance Committee whether we start now and take a break later, or take a short break now and come back to the agenda item? I'm certainly prepared to move forward with item D4 at this time. I guess show of hands, everybody comfortable moving forward now?
Love a break.
Okay, Councillor McCallum wants to have an early break, so we'll call a 10-minute break, which, can't see the time, but
4:40.
4:40. We'll see you then. Okay, I hear things again. Can people hear me? Okay.
You should see all the meaningful stares my kids keep giving me for me to pay attention to them during the meeting.
Mhm. Are we now live? Anyone know?
Hello,
Girl.
yes, we're live. We're streaming now.
Streaming now?
Yes.
Okay, with that, then I will call the meeting back to order. And we'll turn to item D4, the pandemic financial response. Ms. Richardson.
Actually, it's Ms. Rogers, and I'll do this piece.
Okay, great. Ms. Rogers, give Ms. Richardson a break.
Yes, she's had a big day.
Therese,
Divide and conquer.
Therese, do you want to unclick your video so we can see you?
I'll need Ms. Hyde to do that. I can't do it.
Okay, yeah, that'd be great.
I hear clicking, so.
Oh, that's me.
Okay.
I'll text her. You can get started.
Okay,
Therese.
perfect. Thank you. Okay, Mayor and members of council are actually this afternoon sitting as the Finance Committee. I will be providing an update on our financial response to the pandemic and our next steps. We are bringing forward this recommendation to develop a response to the pandemic from a financial perspective with regards to our own finances as an organization, and also to consider options available to support individuals and businesses in our community. And the recommendation is that the Finance Committee direct administration to prepare amendments to the 2020 operating budget to address the medium impact pandemic scenario for consideration by council as soon as reasonably possible, and that the amendments achieve the following outcomes. That we maintain essential services and business continuity, that we provide departmental expenditure reductions to help mitigate losses in revenue, that the outcomes allow for scalability of operations post-pandemic, that we provide increased social and economic development supports for those individuals and businesses most impacted by the pandemic, and that we provide options to reduce the 2020 tax requirement. And I'll go through these various items through my presentation. Now, our focus with these outcomes is to provide council with options for further expenditure reductions in order to address the lost revenue, reduce the tax burden, and provide increased social and economic development supports for those individuals and businesses most impacted by this pandemic. So an immense amount of internal discussion and planning has already happened and continues to happen regarding how the town will adapt and react proactively to the changing circumstances brought on by this pandemic. Early in March, managers were given the task of reviewing each department's budget and revising projected revenue and expense figures based on the following three scenarios. We considered a low impact scenario, which had operations impacted to the end of May, a medium impact scenario with operations impacted to the end of July, and a high impact scenario, which had operations impacted to the end of December. And the work that we've done so far provided us with some preliminary information. We have continued to refine these original estimates as more information has become available. Part of what has become available is some information around the timing, and so I'll talk about that in a moment. We are recommending that we look at the medium-term scenario. In addition to operating budget reviews, we did also review our capital projects. And the lens that we used here was looking at grant-funded projects, and it really makes sense to keep grant-funded projects going.
Many of our infrastructure projects are grant funded by different levels of government, and delaying those projects would mean losing that funding, which doesn't make sense. Proceeding also has several other benefits. We keep the funding, we keep people in our community working, and we can take advantage of quiet time in town to complete some more disruptive projects. The other capital piece that we've been looking at and have done some preliminary work on is to ensure that we have shovel-ready projects ready for potential grant funding. Both the federal and provincial governments typically provide grant funding as an economic stimulus. So being ready with projects that we could proceed with increases our chances of getting some of this funding. So from a duration assumption perspective, we are recommending, as I said, that medium impact scenario, which has operations impacted through to the end of July. Quantifying any budget impacts also requires these accompanying assumptions around the duration. And it really is a multi-million-dollar question that I think nobody in the world can answer. So we are really doing our best to make assumptions around that timing. Given recent statements from the province regarding the expected timing for the peak and the duration of the backside of this curve, we feel that the most prudent option to look at is the midterm or medium impact scenario. As we embarked on the work to prepare and plan for budget adjustments that would be required through the end of July, we started by looking at what work needs to be done during this time. And we used the priorities established by the Emergency Coordination Center, or the ECC, to make these decisions. And these priorities are in no particular order. But prioritizing the health and well-being of our staff and residents, supporting provincial efforts to contain the virus, as outlined by the Chief Medical Officer of Health, and Ms. DeSoto spoke to that in the earlier presentation. Maintaining essential services and critical infrastructure, supporting businesses and mitigating economic loss, and maintaining business continuity during the emergency response. In addition to the ECC priorities, which are really generally about how we're supporting the community at large, we have a number of operational priorities which help provide a framework for budget reviews. And I'll just review these quickly for us. Maintaining essential services, including redundancy. I will talk more about essential services in a moment, but the redundancy concept is really ensuring that we have enough staff available to maintain these essential services, even if some of our own staff get sick. So it really is just building in that buffer to make sure that we can continue to provide those essential services. Another operational priority has been redeploying employees where meaningful work exists. And so we have done some redeployment across the organization. Some of our areas have experienced increased workload as a result of COVID-19. And so redeploying resources to give those departments the help they need is an approach we've taken. And one example of that is redeploying some recreation staff to establish the call center that we have in place, again, that Ms. DeSoto spoke about in her COVID update. We have looked at changing the timing of projects to alleviate some future impacts. And that's both on large scale capital projects like the TIP 20. You'll see the Benchlands and Bow Valley Trail intersection now torn up, really being able to do as much of that work as possible while our traffic volumes are low is helpful. We've also brought some maintenance projects forward in facilities and recreation, and I'll talk a little bit more about those later. Next item is maintaining scalability of service delivery. What we're talking about here is the ability to be able to ramp up our services as the situation changes, and then potentially, if it needs to, again, be able to ramp down. We just don't know what's going to be coming, but being able to stay nimble to adjust to those changing conditions is important. And finally, staffing and service level reductions. Where meaningful and ongoing work or redeployment are not options, we have laid off some staff, and I'll talk more about that shortly. Okay, I did want to take a moment just to talk about continued services. Despite closing some of our facilities, the town continues to provide services that residents rely upon daily, even during a pandemic. The services we continue to provide include, but are not limited to, I just don't have time to list everything that's happening, but I will get some of the highlights here. We're continuing to provide safe water and take away wastewater. We have transit, which many local essential workers rely on to get to their jobs. We continue to maintain our streets, including snow removal, street sweeping, street light, and fleet maintenance. Parks and the cemetery continue to have operations. We have had cemetery services that have met those physical distancing guidelines and groups of less than 15 in size. Our garbage and recycling collection numbers remain virtually the same as this time last year, with an increase in food waste collection due to our organics program, but also due to more people being at home and cooking. On the emergency services side, we continue to provide by law RCMP, emergency management, and fire rescue services. And all work in planning and development continues. As an example, application and permit reviews continue to be processed, with March 2020 numbers being similar to March 2018 and only slightly lower than last year. And this helps keep our community working. In engineering, permit review and construction management continues, again, supporting work in our community and advancing critical infrastructure. We're completing required facility maintenance while facilities are closed. We have provided increased social services, including our emergency social services team, establishment of this call center that we've talked about, the newly approved family resource network, and working hard to connect our community with the resources they need at this time. Our finance team continues to pay our bills, complete tax and assessment work through budget exercises like this, and process the 428 requests we've had for utility and tax deferral. We continue to have council meetings. Economic development is supporting our business community. And to support all of this, we have our communications, human resources, IT, and administration teams. As we know, not everything is an essential service that needs to be provided during this time. And we have taken a number of actions, including closing Elevation Place, the Canmore Recreation Center, and other town facilities to the public. These closures have resulted in significant revenue loss, and I will get into the scale of the loss shortly. We are, however, taking advantage of closures to conduct some required maintenance work in these facilities that was originally scheduled for later in the year. And this will help us avoid future facility closures, which will minimize service disruptions and maximize revenue potential once we open again. As well, we have allowed for the deferral of tax and utility payments for 3 months. And to date, as I mentioned, we've had 428 accounts who've requested this deferral. The Safe Park program is being postponed. However, administration is working on developing an interim program that can support individuals who are living in their vehicles. So there are currently no savings expected with this change. The paid parking program is being delayed, and this program was anticipated to bring $102,000 in revenue this year. In addition, in closing some facilities, we have made staffing reductions in the recreation department. 93 casual and contract recreation staff were laid off effective March 23rd, which has reduced our payroll expenses by approximately $60,000 a month. Additionally, 23 permanent recreation staff, both full-time and part-time staff, have been issued notice of temporary layoff, which will begin between April 24th and May 8th, and provides an additional $110,000 in payroll savings per month. Once these layoffs are complete, a skeleton staff will be remaining in recreation to work on capital projects, update required policies and procedures, and complete the reopening plan so that we're ready to ramp up again, as we spoke about. Additionally, we have suspended hiring and have rescinded offers to most seasonal staff, and about 140 people in total have been impacted by these layoffs and the rescission of summer offers. It is important to note that the savings achieved from staffing reductions due to facility closures are significantly less than the revenues that we've lost. We are expecting a $2 million loss of revenue during the period of mid-March to the end of July, which was that midterm assumption that I've been speaking about. Even cutting expenses in the areas where we are closed doesn't make up for the projected loss in these revenues. We just don't have the ability to offset that lost revenue by simply cutting expenses and staffing in these areas. Large facilities like the Recreation Center and Elevation Place have a significant number of fixed costs that don't go away when a building is closed. Our lost revenue, again, through the end of July for Elevation Place memberships and drop-in fees is about $550,000. Recreation programs and lessons for that time frame, we're losing $240,000. In facility rentals and leases, we'll be losing $600,000 in revenue. Late payment fines for this time will be about $65,000 in lost revenue, and that relates back to the tax and utility deferrals that I spoke about earlier. We've waived late penalties for those deferrals, but there is a corresponding loss of revenue. And then we have a general other category of about $545,000, which includes revenue from other types of fines, permit revenue, franchise fees, inspection revenue, and so on. And we're not alone in this. Revenue loss is a problem for municipalities across the country, and our auditor spoke to that in the previous presentations. Municipal revenue losses across the country are significant. The City of Toronto is losing $65 million per week. Closer to home, the City of Calgary is anticipating revenue loss for the next 6 months to be in the range of $350 to $400 million. And while our number is clearly smaller, our revenue losses will have a significant impact on Canmore. We do understand that the Federation of Canadian Municipalities, or FCM, is in talks with the federal government to look at ways to support municipalities in these times. But we have no updates on what that might look like yet. Municipalities are prohibited from running a deficit, and some provinces are looking at relaxing that legislation. But unfortunately, that doesn't help in the long term. It just moves that problem down the road. And as our auditor, Mr. Scott, shared, some municipalities are not in as healthy a financial position as the town of Canmore and will find themselves in a deficit situation or needing to take out loans to cover their basic costs. In the meantime, the provincial government has made some changes. There have been ministerial orders extending most deadlines to October 1st of this year. The assessment appeal deadline had originally been moved to October 1st, but late on Friday night, that deadline was changed to July 1st, as the province recognized that there are challenges in trying to set mill rates before the total number of assessment appeals is known. And so that deadline has been brought forward to July 1st. Utilities for electricity and natural gas bill payments can be deferred until June 19th of 2020, and those services cannot be cut off. Education property taxes, both for the residential and non-residential sectors, have been frozen at last year's level, reversing the population and inflation increases that were added into the 2020 provincial budget. The province has frozen what they're collecting in education tax. However, the allocation they use is based on an equalized assessment model. And it means that communities like Banff and Canmore will still see an increase in property taxes because our assessment values have gone up while they've gone down in other parts of the province. Collection of these education property taxes for non-residential properties has been deferred for 6 months, and the province is still working out the mechanics of actually how we'll be able to do that. In normal times, our budget is typically approved in December, and we usually set our mill rates at the first council meeting in May. But with the extension of many of these deadlines, we will be bringing mill rates back to council for approval in June or July to give us more time to review budget, assess the pandemic impacts, and get a better understanding of our assessment appeals. There are a number of federal and provincial programs which have been established to support both businesses and individuals in need. The only areas of impact, though, for financial response from a municipal perspective are these three. We have property taxes to collect revenue. We have fees, user fees, utility rates, development charges, and we have fines and penalties. And we have identified that we have lost significant fees, fines, and penalty revenue. As I've outlined, our lost revenue will exceed the current $2 million estimate if closures and other measures continue beyond the end of July. The focus of our conversation so far really has been about town budgets. So let's just take a look at how property taxes might be affected. For many properties, changes to our tax requirement will have a minimal impact, either as an increase or as a decrease. And to help explain this, we have a couple of examples here to show you. So this $730,000 assessed value represents, the median value of a residential property in Canmore. Okay? And the median value in 2019 was $685,000. So the taxes at a 4.8% tax increase, which is what our current budget is approved at, the 2020 tax on this value of property would be $1,722 compared to $1,655 last year. So that 4.8% tax increase would result in a $67 per year. So a $67 tax increase. If we apply a 0% tax increase and we use these same assessed values of property, the 2019 tax amount is the same, $1,655. At a 0% tax increase, the tax required on that property this year goes to $1,645. So a savings of $10 for the year. It's important to note that the years that we reference here are the tax years. So this was taxes for 2019, taxes for 2020. As legislated by the province, the assessed value shown on a homeowner's or property owner's current year tax notice is based on the economic conditions of that property on July 1st of the previous year. So the 2020 assessments are based on economic conditions of those properties on July 1st of 2019, so last summer. They do not take into account today's market conditions. On the non-residential side, we have two examples. We have a sample hotel on Bow Valley Trail and a sample business on Main Street. Now these are actual businesses. We just didn't want to include their names, but these are real, not made up examples. And again, as legislated by the province, the assessed value as shown on the current year's tax notice is based on economic conditions from July 1st of 2019. So this is a hotel, and I just want to speak to the hospitality sector being a little bit different than what we've seen in the rest of the community. Assessments for this sector have gone up significantly this year, and so these owners will see a larger tax increase. We are confident in the current assessed values as they are based on income data provided by these property owners to our assessor. So in this particular business example, the assessed value of this hotel in 2019 was $5.9 million, I'll just round up. This year, the assessed value is $8.6 million. So taxes in 2019, again at a 4.8% tax increase is the first scenario. Taxes last year were $46,800. They rise to $63,000. So that's an increase of $16,000 for the year. If we have a 0% tax increase and we look at the same property, that $46,800 from 2019 goes to $60,000. So an increase of $13,200. But notable, the difference between that 4.8 and 0% tax increase is just about $3,000. Our other business, our sample business on Main Street, goes from a value in 2019 of 916,000 to 984 in this year's assessment. Sorry, just getting my notes. And taxes actually go down from 72.47 to 72.23 at that 4.8% tax increase. And if we look at the 0% tax increase, the annual decrease would be $342. And the reason for that is that this sector didn't, there was assessment growth in this sector and greater in the non-residential sector. And so depending on the assessed value, you see these mill rate differences. So didn't explain that super well. I don't know if there are any questions. Do you want me to stop there?
Yes, if you don't mind, I have just a quick question on that chart. And it relates to the previous chart as well. So this is the sample business, sorry, the next slide, the sample business on Main Street.
Yeah.
Often we talk in context of average values, average assessment values. I'm just curious if this sample business that you've selected, how it compares to what would be the average, or is that?
Yeah, we had originally calculated using the average, and it was came out at a value of about $500,000, and we thought it wasn't actually representative because you can see even just the value difference between this business on Main Street and this hotel on Bow Valley Trail. This difference is so vast that we actually wanted to include specific examples here to help illustrate this point. So this hotel on Bow Valley Trail is a real property. Go ahead, Lisa.
Right.
Yeah, just to add to that, the average non-residential number gets skewed downwards because of the number of condo hotels we have. And so all of those condos are identified as discrete sort of business units. And so when they're factored into the average, when you look at our average hotels and our average, standalone structures on Main Street, it draws that average down.
Right.
So what this chart, or the next chart, sorry, Therese, the one from the sample business on Main Street is showing is that this structure, this building, actually increased in value, but less than the average overall non-residential property increased in value. I'm not sure if that made more sense.
And that's why they're seeing a decrease, right? Because their increase was less proportionately than the overall increase in the non-residential sector.
Yeah.
And I think just sorry, one other point is though that the numbers that Ms. Rogers was showing for the residential, it was a median number because the residential number, it does include all of our townhomes and detached dwellings as well, but it's more homogeneous. There isn't.
Sure. And it's, I mean, you can compare these numbers in different ways. We generally use average values, but median value is just as good a comparator.
Yeah, and in this particular case, the median value was actually quite close. I guess the difference, average doesn't account for these large swings, the highs and the very lows.
Yeah.
What the median does is it is the specific midpoint, and half of all properties in Canmore are below the $730,000 value, and half of them are above that value. So it really truly reflects the middle. Yeah.
Yeah, and it's really for the purpose of comparing what happens with the variable mill rates. So
correct. Yeah, and to try to illustrate the impact of assessment on mill rate.
Right.
Yeah. Okay. Options that are being explored by administration to provide community support are, sorry, I just went here too far. to reduce this 2020 tax requirement or to use all or part of our 2019 surplus. And just in the previous presentation with Ms. Richardson, you approved allocation of the 2019 surplus to the tax stabilization reserve to give us the flexibility to be able to come back to you and for you to assign that as needed. Sorry. We also have the option to use the pre-existing tax stabilization reserve, and we spoke about that as well earlier. The balance in that fund is currently $2.3 million. So there is, again, an option there. Another option for us to consider is to reduce discretionary transfers to reserves. Currently, that value sits at about 1.4 million. There are impacts to doing that, but that certainly is an option. And then council could consider changing the mill rate split between residential and non-residential. We have done significant amount of work with our tax committee to come up with this split, and we do report on that annually, that the town of Canmore split sits right in the middle of our competitive set at 65 and 35. So 65% residential, 35% non-residential. Additionally,
And it's worth noting there that council chooses to manipulate the tax split in order to improve the situation for non-residential. It's going to worsen the situation for residential or vice versa. So, you know, there is, we get into murky waters if we try to manipulate that tax split.
correct. That doesn't change the total amount of tax collected. It just shifts that burden from one to the other. It's a good point. We have requested that our affiliates review their budgets and report back to us on any savings that they may have. As an example, the library is closed and has been since we've closed Elevation Place, and there have been some layoffs there. So we're just working with all of those affiliates on their budgets. We are reviewing our non-grant funded capital projects again to see if any of those can be delayed. Again, we started this work about 5 weeks ago. We have a whole lot more information now than we did when we first did these reviews. It is important to note, though, that many of these projects have either begun or contracts have been issued. So the amount of flexibility that we have there may be limited, but we are going through that exercise to review that. We continue to explore further reductions to our expenses and also further reductions to staffing and accompanying service levels. It is important to note, though, that any tax reductions that we do now do result in either future reduced services or the need for a higher tax rate in the future. They don't eliminate that need moving forward. So just a consideration.
And I think it's also important to note the level of cut we've already taken to our staff. The numbers, the 93 that were laid off in March and 23 more later this week, that's a significant percentage of our total staff. I'm not sure whether it's 40% or somewhere in that.
That's
realm.
correct. Yep, 41%.
41. So we've laid off 41% of our staff. That's
laid off or not hired back.
Exactly,
41% of
right.
our staff. Correct. Yeah.
So and that most of that happened a month ago.
Yes.
So that's a pretty significant cut. I want to underscore that observation.
Go ahead.
Yeah, just to add some clarity to that number, a significant number of those staff laid off were casual or contract staff. Not to undermine that at all. I'm sure a number of those staff relied heavily on the wages they earned from the town, and but may have had 2 or 3 other jobs as well.
Okay, so we have spent quite a bit of time so far talking about budgets and corresponding impact to taxes. Changes made to tax rates do apply to all property owners, not necessarily based on need, but would be blanket across the board. An additional consideration for council to think about is that we estimate about 30% of our households are not permanent residents. And some of those homes are rarely occupied in a year. So if we think about a 1% tax decrease being roughly equal to $245,000, about $70,000 of that kind of saving would provide for relief for non-permanent residents. What we want to talk about now is identifying other ways and investing in additional social services and business supports that would allow council to more specifically target supports. And our non-permanent residents may receive similar supports in the location of their permanent residence. So it's just a consideration for council to explore. Important also to note here is that not all businesses or residents are property owners. And so doing tax reductions may not provide them with any support. We don't have any legal mechanisms for requiring the property owner to pass relief of rent and so on to their tenants, whether that be residential or non-residential. And so we need to really think about other options for those businesses and residents that have been significantly impacted by COVID, either through job loss or business closure or other factors. And in a recent workshop with council, council really expressed the desire to find ways to support those individuals and businesses that will not be assisted by a reduction in taxes. And so as a result, administration is working on a multi-pronged approach. We are absolutely looking at our budgets, and we've talked a lot about that today, looking at and understanding the impact on taxes. But we continue to explore options to more directly support individuals and businesses through our community social development and economic development teams. And we'll be coming back to council with some suggestions there on how we can provide some really targeted relief. So our next steps are to take the time that we need to continue to work to understand this ever-changing environment and to really work through the options that we are going to bring to council and understand the impacts of those. So we would expect to be back before you in May or June. We don't know specifically yet. We really are have quite a bit of budget work to do with our managers. And that is my presentation. I'm happy to answer questions, and the rest of the team is online as well to help support any questions that council may have.
Thanks very much for that presentation. There was something you said earlier that I didn't quite catch, which was around the setting of the mill rates with the new direction from the province.
So we typically set our mill rates in early May. We would have been coming to you on May 5th. Right. There's challenge in setting mill rates before we understand the amount of assessment appeals that we may be subject to, because it creates some uncertainty around tax collection. And with the deadline for appeals now being moved to July 1st, it gives us some breathing room and some time to figure out the rest of these situations and to get a sense of what we're looking at from an assessment appeal perspective.
Right. So
Does
the
that
mill
answer
rate,
your question? Mm-hmm.
Yeah, mill rates would be coming after July 1st then.
Likely, it's possible that we'll have enough information in June to make an informed recommendation for council.
I suppose if there's no appeals outstanding.
Exactly. Or if we have a sense of the magnitude of the appeals and what that risk might be, then we may be able to proceed earlier than that.
Okay, thank you.
Mm-hmm.
I just wanted to jump in and explore the what we've been talking about, and without any definition, the provision of increased social and economic development supports for those individuals and businesses most impacted by the pandemic. And you spoke very clearly to that need, and we know it's a significant need. Given that it's likely to be some time yet before we are able to get to the point of approving a number of these recommendations for action, concern I have, and I expect others, is about being as nimble as we possibly can. And I don't have a solution or a suggestion, but there's people, as we know, that are needing some sort of supports or solutions now. And if we are providing opportunities in 2 months, it may be too late for a number of people. So I just have that in my, at the front of my mind about, I don't know, encouraging administration, if there's some specific opportunity that comes along before we actually get to the final piece of this work, that administration is encouraged to bring ideas forward and see if council will support them prior to the establishment of the mill rates and the final approval of budget amendments.
Yeah, just to clarify, we would be bringing options to you well before the mill rate approval. Those two items can happen separately, but we do still need a few weeks to get to that point. But I appreciate the point. Thank you.
Great. Are there any questions for Ms. Rogers from councilors? Councillor McCallum.
Thank you, Mayor Barman. So earlier in your presentation, Ms. Rogers, you spoke to in some of your departments finding themselves in a situation where there's an increased workload. And I think because everybody sort of hunkered down in their homes and working from home, perhaps the public don't see the busyness that administration is still working at. Could you provide us some examples as to what departments have seen an increased workload in?
Sure.
Outside of your own?
Outside of my own, yes. And myself and the rest of our admin team.
Yeah.
Yes, certainly our community social development team, and that they lead our emergency social services efforts. And they have absolutely seen an increased workload, and we've been able to redeploy some staff from recreation to support them. We have seen an increased workload in our human resources department. Processing this volume of layoffs is a lot of work. And so we've redeployed again a couple of folks from recreation to support those human resources efforts, both getting people laid off, answering questions for our employees, and then getting ready when we need to bring them back on. We have redeployed an employee into our communications team as well. We're providing, we had started with 7-day-a-week support. I think we're down to 6 days a week there now, but to ensure that we are communicating both internally and with the public frequently, and making sure that messages are current and relevant.
I bet you Waste has got a big job.
Sorry?
I bet you Waste is busy.
They are, yes. We haven't redeployed any additional staff there, but we are unable to do any reductions given that we haven't seen any decrease. And Waste is an interesting example. When some of our residents or visitor friends from Banff will note, they have reduced their solid waste hours of work in Banff, and that's because they do commercial collection. In Canmore, we don't do commercial collection. And so of course in Banff, with most businesses not open, their collection rates have dropped significantly. We haven't seen that because we have always focused on the residential collection. And if anything, we're seeing an increase there with so many people home. We're seeing a lot more spring cleaning happening and actually increased volumes in some cases. So yeah, we have not seen that decrease there. We have provided some additional support to our economic development team as well. They have seen a real increase in calls from our local businesses, and they are really working hard to proactively support those businesses, understand what their varying needs are, and then provide some response and support. And we have now completed, I think, and Dr. Cottle can comment if I get it wrong, I think we've done 3 or 4 webinar sessions that we have offered for local business on a variety of topics. We've had a session on human resources to help them through if they've had to do any staff layoffs, and a finance session for small business. So those types of things are going on. I got the thumbs up there. So I think, yeah, we've got that. Does that answer your question?
Yeah,
Councillor?
that's great. I actually sort of, speaking about waste, I'm curious about the utility budget in general in terms of, we have a lot of commercial accounts as well as residential accounts. And I'm wondering if this pandemic is affecting revenue within the utility in terms of commercial accounts.
Mhm. Yes, it is. So I guess similar to Banff there, we have seen that a reduction in commercial use. Again,
Yeah.
we've seen some increase on the residential side. It's not enough to offset the reductions that we've seen on the commercial side. That is one of the budgets that we are still doing quite a bit of work on, and we'll be able to bring better, more specific information to council once we've had an opportunity to do that. But absolutely, that is an impact that we're seeing. So 50% of our utility charge is a fixed cost. The other 50% is based on consumption. And so the part that is impacted is that consumption piece.
Yeah. And just one more question. We've spoken as the end of July as being the medium-term scenario that we're planning towards. What signs or signals will, outside of course, the health authority speaking to us, what signs or signals will we use as signposts, I guess, when in terms of needing to pivot, whether it's extending that anticipated time back or shortening it?
We have guided those decisions based on our provincial medical officer of health and would continue to do that. We've heard some discussion in the early stages, and Ms. DeSoto can speak to this if I miss any of that information. But as the situation ramped down, it's expected that it will gradually ramp up. And if you recall, we used to be able to have gatherings of people, groups larger than 50, and then that went down to 15, and it's expected the reverse might occur as well.
Right.
And so it wouldn't be from one day to the next, as we understand, a complete opening, but rather a gradual opening. And that's part of that nimbleness that we need to maintain as well, to be able to scale back up as and when that happens.
Perfect. That's the end of my questions for now. Thanks.
Mm-hmm.
Other members of council have a question at this time? Councilor Stanford.
Thank you, Mayor Borman. Thank you, Ms. Rogers, for your presentation. I think my question is around that scalability question, because right now the town is fully operational. I mean, we've declared a state of emergency, a state of local emergency. However, we are functioning as if we have to cover all the bases that we did before, other than our facilities. And our facilities being closing is a very significant aspect of our budgets, but that's a revenue generation source that we have. But a lot of the other budgets that we're fulfilling right now are to provide the services which we still provide, right? And there's bigger demands on our services right now.
Mm-hmm.
So if we're looking at a medium term of addressing some of, the economic pain that we're all feeling in the community, we're going to be looking at scalability for that section, but then we're also going to be looking at scalability to go back to where we're looking at the 2021 budget and, move. So it sounds to me like there are going to have to be some steps of scalability here, because we are looking at a number of different scenarios and we don't know how quickly we're going to be able to move through the scalability of all the things that we're going to be required to do in the next 6 months or the next 18 months even. So is there some discussion about what that scalability could look like? We've got medium term and then we've got next year's budget. So at some point we have to start addressing the next year budget factor too, right? So can you just speak to the scalability aspect of what we're trying to do here?
Sure. The estimates that we have been working on are through that end of July period, but we are also making these calculations and understanding month by month what that might look like. I mean, at some point we have to set a mill rate, and in order to be able to do that, we have to pick a target. And so right now we're saying that end of July is that best target, but we're going to have to continue to be nimble based on whatever happens. And that means savings and potentially service reductions if those impacts continue beyond the end of July. We have started to have some preliminary discussions about what the impact of the decisions we're making now is on the 2021 budget, but we are still, so it's absolutely on the radar. And that is the really long-term scenario, which is part of what makes this exercise so difficult. We're dealing with immediate, midterm, and quite long-term all at the same time, and don't have a lot of information to be able to make those decisions.
I just think it's really important for the community to know how hard everybody's working. Mm-hmm. And that a lot of the community needs are being met in those areas that we're functioning normally. But in some of those areas, there's a lot more demand right now too.
Mm-hmm. So. Yeah, no, that's correct. Really would be facilities and recreation where we've seen that decline, but essentially that other list of essential services and town services that I went through, things are largely unchanged. And we have staff continuing to function very much business as usual, and in some cases more busy than usual. Ms. DeSoto, I think, had a comment to make. I saw your hand up.
Yeah, I was just going to add, Teresa, I think you did a great job of answering that question. Is the one thing we're looking at is we were going to go into another 2-year budget cycle. And given the uncertainty around 2021, let alone 2022, that we're now thinking about potentially just bringing council a 1-year budget. But these are just initial discussions that we're having, but that is one of the options for scalability, for example.
You know, along the same lines of thought, when we talk about reducing the 2020 transfers to reserves, I recognize that that's a tool we have on the table, but I'm a little wary about the impact of the future reserve balances that we calculate very carefully and monitor each year. So a lot of what we're talking about is going to have some future impact that we want to be as aware of as possible about, and acknowledge that some of the actions we take this year are going to have negative effects to the planning and project delivery in future years. I wanted to introduce one other question before I don't know if we're close to wrapping this up, but I sense we are getting to the motion. So looking at the recommended motion, the 5th point is to provide options to reduce the 2020 tax requirement period. And I'm of the opinion that it's important for council and also helpful for administration if we're a bit more specific, set a target. And for argument's sake, the target might be to reduce the 2020 tax requirement to the same level as 2019. That's fairly specific. Is that something that administration would find helpful in terms of focusing their conversation on that aspect of the direction?
Ms. DeSoto, do you want to take that one?
I would find that helpful if council was comfortable setting a target at this point in time. That would give administration some direction, and as the motion suggests, we would bring back options. So there would be options for council to either increase or decrease from that target, depending on the circumstances and situation analysis at the time we bring you back the budget numbers. But I believe that would be helpful for us in communicating to our managers, communicating to the community what our targets are, and then we could come back with sort of what the mitigation impacts would have to be in order to meet that target.
Great. So one part of this conversation, and we went around a bit on this during the workshop, was it just a week ago or 2 weeks ago?
A week ago.
Yeah. And I just want to talk a little bit in this meeting about the overall effect of tax reduction. And Ms. Rogers, you did speak fairly clearly to some aspects of that, but from time to time, I hear, and perhaps other councillors hear from residents who are urging council to make a massive cut to the tax requirement of 25 or 35% or whatever. And I'm cognizant of the fact that that wouldn't have major reduction, say 25%, wouldn't have the really overall beneficial impact to a lot of residents that I think council's looking for. And as I often do when I'm talking about tax increase or decrease, I consider my own personal situation. Coincidentally, our home is assessed at pretty much exactly the average residential assessment of just somewhere below $700,000. And then looking at the taxes that I paid in 2019, the municipal portion, so about 50% of the tax bill, if that was reduced by 25%, it would, at the end of the day, mean about $28 a month less for me as a taxpayer. And honest to God, I don't think that $28 a month is going to make a big difference to me. So I think where we're focusing is really commendable, that we're looking for ways not only to reduce the tax impact, but to provide meaningful responses to the residents and businesses in our community that are really struggling. So I guess I rambled on a little bit there. Are there any other questions or discussion points from councillors at this point? Ms. Rogers?
Just one comment, reductions as you spoke about there, that significant in tax would have to come with service level reductions, and there would be
Sure.
Service level impacts to the community.
And I
Sure,
appreciate that. And I wasn't at all suggesting that. I'm just noting that often people think that simply affecting a massive cut will have a really significant benefit to their financial situation, but just doesn't play out that way. Are there other points? Councillor McCallum, did you have your hand up, Councillor McCallum? Go ahead.
Thank you, Mayor Barman. I agree with you. I think that if we're looking at $28 a month, it's maybe not much to you, but it's actually not really going to dig deeply and help people where they're really at right now, especially when it's $28 a month over 12 months. That's, I think for me, I think that would be quite disappointing. I think the other side of this is in terms of the recovery piece. So our community, the look, the feel, the maintenance, the beauty of it is the product that people come to see. They're much like, well, not much like Niagara Falls, but Niagara Falls without the craziness. But the falls themselves, the community itself, I guess I was thinking more Niagara on the Lake, is the product that people are coming to visit and to spend their dollars. And I would be concerned about the degradation of maintenance of our of what businesses leverage to make money in our community and to employ people, and in which in turn they house their families. I would be concerned in that a 25% cut like that would could really decimate
the recovery that businesses are going to be depending on in the future. So I definitely support what you're saying. That's it.
Did I see Councillor Comfort with your hand up? Yes? Go ahead.
So I've kind of lost track here. I mean, I guess I need to know, what are we trying to do? Are we trying to save money in order to pass it on to the residents? Are we trying to maintain services? Like, I'm a bit confused, I have to say. So a target would help me, and then sort of work at it backwards. You know, this is how much we need to do X, or X plus Y plus Z. And then that means we have to reduce here or here or here.
Right.
I feel like we're dancing around the issue, you know?
No, I think the point is that there's a number of different directions contained in the one motion. So there's a whole, what I expect to see coming back is a whole menu of opportunities. If council chooses this, here's the impact. If you do this, here's the impact. But just to help administration in their work to bring forward and inform that menu of opportunities, having a specific target wouldn't do much good. For instance, if admin came back with a number of recommendations and the result was far less in terms of tax impact than councillors are thinking. So it's important we say right now, when it comes to that part of the motion, that council's in agreement as to the target for reduced tax requirement. But all of the other issues, which I think, in my opinion, are more important than that one component, is we don't know where it's going to go, Councillor. I mean, that's the whole thing about this. There's so much uncertainty, and until the administration completes the work they've been doing and comes back with some specific direction, we're sort of all over the field. I don't know if that answers your question or.
Thanks for the help.
So.
No, I just because I think there's different sectors that need help. So small business needs help, individuals need help, families need help, like that. And I don't think and as you pointed out, not everybody is a homeowner. And what about those folks at Rosie, shush. But what about those folks in housing that, what was it, 30% couldn't pay the rent? Joanna, is that what you quoted?
Social housing, yes. In the province's social housing portfolio, 30% of them are unable to pay their rent right now.
So I bet our numbers aren't far off that. So that's all I'm saying. What I would trust our administration to decide or to know where the funding should go. But right. I'm unclear as to what we've been asked to do, because if it was up to me, I'd just say, I'll just shut down Elevation Place and the rec center for a year, and that's it. People just should deal with it, or whatever, right? People should sacrifice, like, because we're going to have to do something, and it's going to hurt no matter what. So we can't pretend that everything's going to continue on as normal.
But that, Councillor, that's the point of the direction under the fourth bullet point in the motion, which is open-ended, of course, but providing increased social and economic development support for both individuals and businesses most impacted. So that summarizes in a tidy little direction, I think, what you're talking about, but we don't know what are going to be the best ways of addressing that direction until. And
so we're relying on admin to bring us forward some choices that will deliver us what we're looking for.
Correct.
Okay.
So other discussion or questions for Ms. Rogers? Councillor Seeley?
Yeah, we're kind of going around on this one, but I hesitate to making a recommendation. I think administration has a lot of work to do, and putting a number on something that I don't fully understand won't help me. So I have to see things come back, and that's kind of where I'm at.
Yeah, Counselor, the only thing we're putting a number on is the target for the reduced tax requirement.
Right, but I don't know if that's the right thing at this point. I don't know if council has enough information on that. I'd like to see it, but I don't know why I would like to see it yet.
Okay. The CAO indicated it would be helpful in the work that administration is going to do to have an understanding of that specific target. But regardless, when the motion's on the table, if I propose an amendment to that intent, then you can speak against the amendment if you like.
Mayor Borman, another option might be to have a range of, so you could provide a range and say 0 to 2%.
Yeah, I'm
tax
not
increase
talking, I don't want to talk in percentage. I think it's clear to speak specifically to what I suggested, to reduce the tax requirement to the same level as 2019. People seem to get confused if we start talking in percentages. They're not sure percentage of what. Whereas the 2019 tax requirement is black and white. So effectively, that would result in a 0% increase from 2019. And as a starting point, I'm comfortable with that as the starting point. Doesn't preclude the next opportunity when this comes to council, for council to approve a much different change to the tax requirement. But we're just talking about starting points here. We got to get started on this. I mean, I know admin has been working on it for a long time, but it's time to get moving. Are there other questions?
I just want to ask one more question. So we're not talking about one thing. We're talking a whole slate of things, aren't we? A whole menu of things that we're
Yeah,
going
that's what the direction and motion suggests.
Gotcha. Yeah.
Ms. DeSoto.
I was just going to remind councillors to please mute their computers after they speak. We're hearing a lot of feedback, background noise. Thank you.
Right. Things like dogs and cats, right?
Exactly. Yeah.
I think that was your cat we heard, wasn't it? Oh no, that was Councillor Comfort. Okay, I'm looking to wrap this up in the discussion period and get to the motion. Are there any other points that people want to raise or questions that haven't been answered? Seeing none. Thank you very much for a very complex and very complex report that has been presented for Finance Committee. You know, there's been a lot of work just to get to this point, and at least a month's worth of analysis has been underway in administration. But I'm happy that we have it to this point where, at least as the Finance Committee, we can begin to give direction, and look forward to having something come back to council as soon as possible for better direction, better understanding. So at this point, then I will
There it is.
put the motion on the table, and the entire wording in the agenda package is the motion. I'm not going to put 5 separate motions forward. So I guess what's showing on the screen there is the motion. I can read it out. That the Finance Committee directed administration to prepare amendments to the 2020 operating budget to address the medium impact pandemic scenario as defined below for consideration by council as soon as reasonably possible, and that the amendments achieve the following outcomes: maintain essential services and business continuity, provide departmental expenditure reductions to help mitigate losses in revenue, allow for scalability of operations post-pandemic, provide increased social and economic development supports for those individuals and businesses most impacted by the pandemic, and provide options to reduce the 2020 tax requirement. That's the motion as recommended. I'm going to move an amendment to the motion that's on the table. And the amendment would be to reword the fifth point there to read, provide options to reduce the municipal 2020 tax requirements to the same level as 2019. So the target then is to that level. That was the tax requirement in 2019. The amendment adds the word municipal in front of 2020 tax requirement, just to be clear that it's only the municipal taxes that we're talking about. So speaking to the amendment, which is to be specific about the target. Is there a discussion on that amending motion? Councillor Mara?
I'll support your motion. This is sort of where I was aiming for. I know you didn't want to talk in percentages, but not having an increase, but holding our 2019 tax requirement. Just because I know what it may, for some businesses and some people, it may seem a small increase, but to some it may seem huge. And that's because some people may not even be able to pay their taxes. So just keeping that in mind. So.
Other discussion to the motion, amending motion, Councillor Comfort?
Yeah, so just to a caveat there to make sure that people understand, because a lot of people still don't understand that we don't have any control over the education portion of the tax, and to maybe mention that either in the motion or something.
That's why
you said you specified municipal,
right.
but that doesn't kind of clang with people. So I think we should make it clear, you know, I mean, they don't, it's complicated, you know? So I think we should make it clear that it won't be that much of a benefit. Like a lot of people go, great, my taxes won't go up, but they won't realize, well, they are going to go up because you're going to have to pay that education tax, whether or not your kid's in school.
Yeah.
So, you know, it's a bit disingenuous to me. Anyway, but whatever, you know, making it clear it's the municipal portion.
Yeah, that's the intent of adding the word municipal.
Yeah.
We certainly, every year, we very clear messaging in the community that the educational requisition, about 50% of their tax bill that goes directly to the province, is entirely outside of our control. The only part of the budget that we can control is the municipal portion. So while I appreciate your interest in having that caveat, it's not really something that could be added into the wording.
So what would the amendment change the reading to then?
Provide options to reduce the municipal 2020 tax requirement to the same level as 2019. So it specifies municipal.
Okay.
Councillor Seeley. Councillor Comfort, could you turn your...
Support the amendment.
Pardon me?
I'll support the amendment. It's a direction I wanted to go originally, and we can always adjust as needed, but it does give administration the direction they're looking for.
Thank you. Is there other discussion on the amending motion? Councillor McCallum?
I'll support it, but I would like to remind everybody that we are rolling back a tax increase that is already 4 months in the making. So we've already spent, you know, we're already a quarter, more than a quarter through Q4, partially through Q2, or sorry, Q1, partially through Q2. And that means that we're actually going to have to roll back the spending that we've already accumulated in 2020 to be able to match what happened in 2019, or the taxes in 2019. So that doesn't change me supporting the motion, but I just, you're right, Councillor Comfort. That although I find the taxes simple, they are complex, and it's, you know, boring, and people don't want to educate themselves on it generally, which is, I totally understand. But that's a larger piece that we need to be cognizant of, that we're actually asking for more than a hold. We're actually asking admin to find that 4.8% that already has occurred, that has been expended in 2020. So it's going to be actually more than 4.8%. Just pointing that out.
Yeah, it's certainly complicated.
Yep.
Is there other discussion on the amending motion? Almost lost Councillor Mara there. I can't quite see. Oh, I see her glasses there. Okay, if there's no further discussion on the amending motion, I'll call the question on that, which is to reword the fifth part of the motion to read, provide options to reduce the municipal 2020 tax requirements to the same level as 2019. Calling the question on that amending motion, those in favor? Opposed? Motion's carried unanimously. Back to then to the amended motion, and I won't read the entire thing out again. You have it in your agenda. Is there discussion on the main motion as amended? I'll speak, of course, in support of the full motion. Everybody is acknowledging in many ways how complex and challenging this is, and it's certainly, in all of the years that I've been involved in municipal budget approvals, never seen any situation like this, nor hopefully will anybody here at the town of Canmore for a long time to come. But the key points in the motion to me are, firstly, that we're addressing the medium impact. I agree that that's a logical and supportable approach to take. We have to identify how long of an impact we're expecting and make our planning based on that. So so that's important, I think, to have that particularly underscored in the motion. Maintaining essential services and business continuity is also critical. We have to do that. And the fourth point, the providing increased social and economic development supports for the individuals and businesses most impacted. That's really, to me, the meat of the matter. And I think kudos to council for putting that high on the list of what we want to see happen for our community. So for those reasons and a number of other reasons, I'll be supporting the amended motion. Councillor Hillstead.
Thank you, Mayor Borman. I will also support all the motions, or the motion with all the added things. I just want to thank administration for all the hard work that they put in to get to this point, and all the hard work that they're going to have to put in to bring us back something that we can go over and choose what to do with. I also just want to comment on the fact that, you know, a lot of people are being negatively affected by this pandemic, but there are still those in our community that are, for the most part, life goes on fairly normally. They still have a job. So again, with the whole tax reduction, it's not going to be equal to everyone, because some people are still able to pay their taxes no problem, while others are not. So I'm really happy to see the increased social and economic development supports for individuals and business most impacted by the pandemic, because not everyone is impacted the same. And that's just something that everyone needs to be cognizant about. So with that, I'll support the motion.
Other discussion on the motion, Councillor McCallum.
Thank you, Mayor Barman. I would be happy to support this motion. As you know, the provision of increased social and economic development supports, as in the fourth piece of the motion, is very important to me, as I'm sure it's to the rest of council, but it's really in response to the inelegance of the property tax system. it's a very imperfect tool that we're using and that we're forced to use by the provincial government to get revenue, to provide services for citizens and residents. But by using that tool to provide relief, we're not actually going to be able to get relief to the people who really, really need it. And those that perhaps have the highest appraised assets or assessed assets are the ones that are going to receive the most amount of relief. And in a residential scenario, when a third of your population is non-permanent, that doesn't it doesn't seem to match up to what our goals are. So we do appreciate admin putting that in. I also wanted to comment on the fact that I know that some people think that this process that we're going through our finances, et cetera, isn't happening fast enough. And to that, I would remind them that the process of creating our budget is a 6-month process, a 5-month process, rather. We usually send those marching orders out to admin in June, and they come back in November, December, and we make our final decision in December. So it took us a long time to get the budget we had, and it's going to take time for us to be able to rework our numbers and see what that effect is and what sort of unintended consequences there are when you touch a certain part of the budget and how that affects the other part of the budget. So we have to remember that our budget needs to be reflective of our values as a community, and it should be reflective of our values as a community. And I think the fact that we're digging really deep here and being really thoughtful and meaningful in terms of the work that we're trying to do and having administration do is important. And that we're all thinking of everybody. We're all paying these taxes. It's not just not us paying them. So we're all going to be affected by the decisions and choices that we make as a council. And I'm just really proud of the fact that we're being thoughtful and deliberate about it. So I'm pleased to support this motion. Thank you.
Councillor Sanford.
Thank you, Mayor Barman. I too will support the motion. I think the recommendations cover a lot of different areas that need attention. And we've looked at what needs to be addressed. And I think the bullets in the motion actually will be able to help administration direct the energies and the resources towards those areas that are outlined. One thing I would like to just say is that when the municipality will collect a target of the 2019 tax rate, we're going to be basing that on the assessments that have changed from 2019. So people's actual tax payable will be different than 2019. In fact, we've already demonstrated that some of the commercial properties are quite different in relation to each other. And some of the residential properties will also be quite different in relation to each other. But using that tax requisition as a target for 2019 will ultimately lower the requisition for 2020. But it will be based on a different set of variables because it will be based on a different set of assessments. And then we also there will be a school tax requisition that'll be different. So as much as we can try and keep certain things the same, there will be parts of it that will be different and it'll have different impacts. But I will support that goal of that direction because I think that's a reasonable goal. And we've also recently enhanced the tax stabilization reserve, which is a tool that administration might be able to use to reach that goal. So thank you. I will support that.
Great. Firstly, I appreciate everything you said. I agree with that. And it has me thinking about, the community conversations after this. And I'm really hopeful that residents and businesses in the community take the time to educate themselves, as Councillor McCallum had suggested, around this whole complicated exercise. And, you know, the process for setting property assessment values, for instance, that's a fixed process. The use of mill rates and how blunt a tool that is for us. You know, we talked about this. If you raise the mill rate for one class, it goes down for the other, or vice versa. So it's a blunt tool. And as well, the tax equity that we had addressed several years ago between residential and non-residential taxpayers with the 65-35 split. So I really hope that people will take the time to fully understand all of those mechanisms that go into the application of these matters and respond or provide input in an informed way. Are there others who want to speak directly to the motion? Councillor Sealy?
I'll also support this motion. I think it demonstrates prudent financial management in these unprecedented times. Not sure what it's going to look like, but it's a direction that we need to take, and I agree with all the points.
Further discussion on the motion? Seeing none, I'll call the question. Those in favor? Opposed? Motion's carried unanimously. And just before I adjourn the meeting, I'll add my thanks to the rest of councils for the tremendous work that administration has been doing for weeks to get us to this point, and even more so my appreciation for the work you're going to be doing over the next several weeks. I feel very, very positive about the approach that we're taking at the Finance Committee level, and I really do look forward to having a more informed discussion about these possibilities when it comes to council for a decision. So with that, I will move that the meeting be adjourned. Those in favor? Opposed? Meeting's adjourned. Thank you all.